Welcome back to the Energy Signal Podcast, episode number 5, your one-stop shop for the latest trends, policies, and market movers shaping the U.S. and global energy landscape. I'm your host, Josh Lefebvre, joining you from the energy capital of the world, Houston, Texas. We're recording this episode today on Sunday, August 31st, 2025. Today, we'll be looking at how oil prices remain steady while a surprising uptick in gas prices. We'll also check out why one of the Permian's biggest crude oil pipelines may be on the market for sale. We have a big story coming out of the Russia-Ukraine conflict. Specifically, the Ukraine actually just knocked out nearly a fifth of Russia's refining capacity. We'll also dig into a new UT Austin breakthrough that could change the way we recover oil. And then finally, we'll finish off with how the US continues to collapse in renewable investments and the legal fights that are about to take place. Stay tuned. You're not going to want to miss this one. This episode of the Energy Signal Podcast is brought to you by StageTracker AI, the real-time frac intelligence platform that's powered by AI agents that help engineers and operators stay ahead in the frac game. Whether you're trying to optimize pump schedules, reduce NPT, or benchmark crew performance, StageTracker gives you the live view of what's really happening, stage by stage. No more waiting on the post-job reports to know if you're behind. Learn more at stagetracker.ai because every minute counts on the job. So this week we saw crude oil go from $63.85 up to $64, 0.23% increase, very small. I mean, as long as oil remains above the $60 mark, many producers break even, especially in the Permian Basin. But the moment those prices go below $60, that's where there's a real threat and growth really halts. So we got to keep it above that $60 mark. On the other hand, the natural gas went from $2.64 up to $3.02, an increase of 14.39%. That's huge. And this is despite reports of a colder August, a colder September. I believe this has more to do with the U.S. continuing to ramp up LNG exports, specifically to countries like Europe and Asia. Now on to our biggest U.S. stocks. First up is ExxonMobil. It started its week off at $110.90. It went up to $114.29, an increase of 3.5%. Chevron also had an increase, went from $157.90 up to $160.60. So it also saw an increase of 1.71%. ConocoPhillips, they actually also an increase from $96.79 up to $98.97, a 2.25% increase. So basically all three players had decent financials this week. And I believe that a lot of this was to do with, yes, they recently had their Q2 earnings, and yes, all of their numbers, all their financials showed a solid foundation. But there was actually a report put out by Exxon recently where they stated that global oil demand is likely to plateau around 2030 at around 1 million barrels a day, but they are expected to continue at that pace until 2050. So despite, what the UN is saying about, net zero by 2030, 2040, that just seems very unlikely. And also, we're in that same report, and again, this was put out by Exxon, so take it with a grain of salt, but they said that while oil is expected to plateau in 2030, gas is expected to see a steady increase of 20% until 2050. So for all of those who are saying oil and gas is done, it's dead, you just look at these numbers and, we see a steady increase, at least for the next couple of years. On to our big stories for the week. The biggest story is that the San Antonio-based EPIC Midstreams, they're actually exploring a sale. Of course, that EPIC Midstreams, their biggest asset is the EPIC Crude pipeline, and it is responsible for moving more than 600,000 barrels a day, basically from the Permian, from the Eagle Ford to export facilities all along the Gulf. So it's up for sale and is currently expected to go for somewhere between $2.5 to $3.5 billion. Its current owners are made up Aris Management. They have a 45% stake, while Diamondback Energy plus Kinetic are splitting the rest. It's unclear which percentages they have, but at this time, both Diamondback and Kinetic that they are also open to selling their stakes, as these assets are basically non-core to their deliverables, right? So Diamondback, more of an upstream, but yes, they have some midstream assets. So again, we'll keep you posted on this outcome. At this time, it's still very early. Our next story, and this happened actually earlier in the week. So the Ukraine actually struck 10 of Russia's refineries, knocking out about 17% of Russia's refining capacity. So this is the biggest hit yet since the war started to Putin's oil sector. So the attacks, they basically triggered massive gasoline shortages in southern Russia, Crimea, and even Vladivostok, where basically drivers are facing long fuel lines. So Russia, of course, they rely on oil and gas for 25% of the country's budget revenues. And actually, this oil and gas is actually what's mostly funding Russia's current defense spending, which is actually at its highest since the Cold War era. So assuming that you hit them where it hurts, their moneymaker, I mean, this comes as a huge blow to Russia. And of course, all of this is coming at a time where Russia is already being forced to sell their oil at a very discounted rate to countries like China and India due to the tariffs that are being imposed by the US on countries who continue to buy that Russian oil. Our next story is a very interesting one. So UT Austin researchers are currently testing a new way to boost oil recovery by mixing CO2 with a liquid chemical, some kind of formate, instead of just using CO2 or water. So in the models that they were using at the University of Austin, and again, this is still early, they were showing that basins specifically in the Permian, with using this new method, they saw almost a 20% increase oil extracted as opposed to just using CO2 alone. Yes, this is still in the research phase, and according to the researchers, making enough of this formate coming from the captured CO2, it just isn't quite ready yet. And even if this were to, be proven feasible, it would need to be scaled up. New policies would need to be made to support it. So it's still early. But I mean, if you're not aware, even with modern horizontal drilling, hydraulic fracturing, only about 10 to 15% of the oil in place is typically produced in tight shale formations like the Permian. So this basically means that 85 to 90% of the actual oil stays in the ground after the well's primary production. So this is why this new method is so intriguing, right? And on to renewables for the week. So our biggest story is, according to Bloomberg, US investments in renewable energies projects specifically have dropped by $20.5 billion. That's a 36% decrease just in the first half of 2025. This makes it the lowest level of renewable energy investments since 2014. This follows the policy changes under the Trump administration, including the halted offshore wind projects and the growing uncertainty over clean energy support. In contrast, global investments have been surging in Europe. So this is everything in line with what we've been speaking about for the last couple of weeks. And it actually lends really well into our second story, which is the governors of Rhode Island and Connecticut both vowed to legally challenge the Trump administration's stop work order on the nearly completed Revolution Wind project, which, if you recall, was 80% complete. It was set to create a bunch of wind turbines off the coast of Rhode Island, and that project was intended to power 350,000 homes in the Rhode Island and Connecticut region. Rhode Island's governor, Dan McKee, criticized the stop work order and said he and Connecticut's governor, Ned Lamont, will pursue every avenue to reverse the decision to halt work on the Revolution Wind project. Senator Chris Murphy, a Connecticut Democrat, connected the decision to Trump's reported pitch last year to oil industry executives to trade $1 billion in campaign donations for regulatory favors. He's been quoted as saying, "This is a story of corruption, plain and simple. President Trump has sold our country out to big corporations with the oil and gas industry at the top of the list," the senator added. So I'm sure there's going to be some litigations. I'm sure there's going to be legal recourse here. sector, they'll be in the courts fighting this for years. So obviously some big stories coming out this week. And the one theme that I'm continuing to see in the energy sector is this fight between renewables and fossil fuels, right? Trump's came in, he's wanted to renew this, the American dominance of fossil fuels, coal, steel, oil and gas. But on the other hand, all of these countries, Europe, Asia, they're all pushing more towards, renewables. So meanwhile, the US is just pulling back all these incentives, all these tax credits. And ultimately, will the US fall behind? I don't know, right? Like we're seeing so many reports stating that energy demands are just continuing to increase year over year and that renewables just won't be able to keep up with the demand. Obviously, with oil and gas, we already have that infrastructure in place to extract it. We already have the refineries, we have the transportation modes. So we have a much better infrastructure, especially in America. So, I don't see the oil and gas sector going away anytime soon, at least not to 2050. That's what reports are stating. So I think overall it's a good industry to be in right now, but that's not to say that both industries can't coexist with one another, right? We could have renewable energy, we can have oil and gas, and we can have them working in synchronicity. So, it's just every week we're just seeing renewable projects being gutted. So it'll be interesting to see the headlines next week. But until then, this is the Energy Signal podcast. I'm Josh, your host, signing out. Until next week,